Hi, I'm Brian Khatambakhsh with another episode of Mississauga Real Estate Market Stats for month of July 2023. We do this every month before even Real Estate Council of Ontario or Toronto Real Estate Board will have their numbers out. We analyze the numbers and we give it to you because real estate is our life. Our finger is on the pulse of the market. Every day we know what's going on. So let's get to the point. How did the market do after two interest rate increase by Bank of Canada? And that's what I have to analyze for you here. So as always, we are looking at the supply and demand, and that's what dictates the prices of any product. It's an economy 101. So on the supply side and the demand side, supply side is the number of listings coming in the market. And as of July 31st, the total number of listings for sale in Mississauga was 1378, just under 1400, and the number of sales were 494. Now let's compare this with the last 2 months. And the reason I'm going 2 months this time is because I want you to see the trend. So last month at the same time, we had 1245 listings for sale, homes for sale. So the demand side has gone up. Whenever the demand side goes up, we have to look at the supply side goes up, we have to look at the demand side. And with the same token, demand side sales went from 685 to 494. So because it's a 28% drop. So 28% drop on demand and there's a 10% increase in supply. So that tilts the market towards the buyer's market a little bit because there's more listing in the market. No, I'm not saying it's a buyer's market. I'm just saying tilting it a little bit toward that. And that trend continues if you look from May to now. So if you compare these numbers with 2 months ago, which is May, just when Bank of Canada start increasing the rate again, we see that this is 34% 34% more supply in the market, and there's 42% less sale. So to last month as this much, and then 2 months ago with this much. What does that mean? This is a direct effect of interest rate increase. The interest rate increase actually hasn't come into place because usually people have 90 to 120 days fixed guarantee rate. So the buyers that are buying now, they were qualified maybe before this. However, is the wording the Bank of Canada used to slow the market, spook the market, fears and everything they put in the market, slow the market down. And that's what's affecting the mood of the buyers at this point. However, I want to compare something with this. If I go back to July of last year, okay, July of 2022, we were almost in a very, very down market after many rate increase since February of the 2022. Numbers are similar to what we have in this month. It was 1474 versus 1378. There's a few percentage of difference. And then 444 sales versus 494. So the sell side is a little bit more and the listing side is slightly bit less, but we are almost in the same situation. And I want to bring one thing as well. The month of July and August, usually before pandemic, okay, on the normal years, they were kind of a slower market, especially August was even slower than July because it's a vacation season. People wake up first day of August and say, oh my God, there's only 1 month left from summer, let's just enjoy it. Nobody's in the mood to buy or anything. However, there are a lot of deals that happen during that time. So there's a bit of a seasonality in there. But what I want to say is that what Bank of Canada did in terms of slowing the market has an effect. What does that mean to you as a buyer or a seller? Look, it looks like for the remainder of this year, you're not gonna have a huge leg up. By the look of it, looks like the trend is slightly tilting downward. My guess is that we're gonna tilt here and kind of level off. It really depends on also what Bank of Canada will do on September, okay? If they decide to do another increase, it's a different story. Nobody has a crystal ball. All the economists, they come after the fact and they predict things, but nobody does it before correctly. We have to wait for that. But if you were thinking of selling your home for the rest of this year, you better take a look at it now and look into it. Get your home ready at least for the beginning of the fall or even this month to make sure that you haven't lost this batch of buyers that are in the market for another couple of months. Who knows what happens after that? And if you're a buyer, there are some good deals right now is happening as well. So if you look at it as a buyer, 5 years from now, you will be up anyways. Things are, real estate is a long-term game. If you look at the average prices of the homes from 2020 until now, 23 years later, we had some jitters, but it's always upside. It's like standing on the elevator and playing a yo-yo, right? Sometimes the yo-yo goes up and down, but overall, with respect to the ground, you're always going up. Look, real estate is a long-term game. We have a little bit of slowdown as Bank of Canada wanted. What does that mean to you guys? It means to be wise, do your due diligence, and find out why you are making your move. If you are a buyer, you want to get rid of that rent, hell, like $3,000 rent has gone up a lot. $3,000 rent a month you're throwing out of the window. You might as well own something, start paying off your own home. A little bit higher interest rate will eventually go down. And if you're a seller, you must sell. Hey, look, do it now rather than later. Don't wait till all these people say, oh, wait, because you don't know how long this will last. I, for myself, thought that based on the last 6 months ago, I thought the market was done going down because Bank of Canada says it's not going to increase the interest rate, but they start doing it. So what does that mean? Future is unpredictable. If you were retiring, if you were downsizing, if you were moving on other places, or if you do anything else, like you have to sell. Don't wait. Get the price that you can get today, because who knows? This can take a little bit longer. And if you're a buyer, you just do the same thing, especially first time buyer. Now, the special portion of the market that really can benefit from this are move up buyer. If you're living in a condo, you're paying $800-900 maintenance fee. You can convert that and jump into a semi-detached. That's the best thing. Move up buyers are enjoying this the most, because bottom of the end of the market, not bottom, I'm saying like affordable sector of the market, like small townhomes, condos, they always hold better because that's the affordable side of the market. Things are $1.5 million, $2 million and over, they don't do as well. So that's why you may see this gap since last year narrower and narrower. I know with the interest rates, your payments, monthly payments with the lower capital gap still be the same, but the interest rate will change. $300,000 that you save will be permanent in your pocket. Call us, we can help you out. If you have any question, we are a real estate consultant. We've done the math for all of this. We can help you out. You don't have to buy or sell. Call us for consultation. 647-848-2652 is my number. Call me, text me, or you can find us on internet. Email me or Facebook DM me, any way you like. If you have any question real estate, we are here to help. Okay? Until next month, have a fantastic day and enjoy your summer.